In the best hearing aids of 2024 by USA Today, Audion Hearing has the highest quality hearing aids at the lowest prices, just $189.
I actually like them better than my old $5,000 hearing aids.
I could not believe how my hearing and life changed.
Join over 500,000 happy customers by going to audionhearing.com. That's AUDIEN hearing.com.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other. and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Morning, welcome back. Happy Thursday to the Financial Exchange. And like many days over the course of the last month, it is just a wildfire of changing narratives and stories here. But let's kind of introduce a few of them. It's Mike, Paul, and Tucker with you on a Thursday. Yesterday at 4 p.m., Nvidia released their earnings. At 5 p.m., they had their earnings call with analysts. Seemingly very good news across the board for Nvidia. We'll be covering that. At 8:30 a.m. this morning, we received initial jobless claims. So how many people filed for unemployment in the previous week? Hotter than expected. And then, was it yesterday evening or afternoon during a meeting with his cabinet meeting?
That was in the
cabinet
morning.
Secretaries. That was this morning?
No, that was yesterday morning.
Yesterday morning, Donald Trump stated that tariffs on Mexico and Canada would likely be looking at April 2nd. This morning, stating that they are going into place as planned on March 4th. So things are bouncing around pretty quickly here. Let's start with Nvidia, whose stock was up in early trading prior to the news coming out of the tariffs going into effect on March 4th. This was early pre-market trading. I saw the stock up 2 to 3+% on better than expected earnings. Right now, down about 3%. I think on tariff insinuations here. But let's start with the earnings themselves here, Paul, because across the board, better than expected. Selling well, no real concern about DeepSeek or any other Chinese innovation, and all power ahead seems like the message from Nvidia.
Yeah, these are really good numbers, Mike, across the board. I'll just dive into them briefly here. They saw a 78% rise in revenue to $39 billion in their most recent quarter, and then for this upcoming quarter that they're in the midst of, they reported that they're anticipating revenue of $43 billion. That exceeds analyst expectations of $42 billion. So you have these two factors combined when you do these conference calls. Typically what you're looking to do is beat analyst expectations on what you saw from the past quarter, and then to guide upwards on your current quarter. Both of those things in a nutshell are very positive, but I would almost compare Nvidia to some sort of, perennial Super Bowl winner or some sort of, athlete who has just done no wrong and continues to perform at a high level. The bar keeps getting higher and higher.
Yes.
And that's really what I believe that we're seeing here. I have to sort of grapple as to why it's selling off today. It was going to be a more muted gain, it seemed like, heading into the market, but
I'll tell you, I think it's tariffs. I don't think it has much to do. And I know that tariffs on Mexico and Canada don't really make sense in terms of why Nvidia would be selling off itself.
Yeah.
But this stock and the market as a whole was up substantially until Donald Trump said that tariffs are going into place on March 4th.
Oh, so more of like a macro commentary.
I think this
not
is a macro
specific
thing.
to, because it's such a heavy portion of the S&P 500. I mean, it's always hard to speculate, what the movement is. But that makes more sense than anything that we're about to talk about right here.
Yeah, so revenue for their latest Blackwell AI chips. These are the latest and greatest chips that are really transforming the company from one that sold chips that are used to develop the newest AI models, which that was Nvidia. There was some concern over the course of the last year or so that, hey, there's fewer and fewer companies doing training now. That's not where the big investment is being made. It is on big, complex, ongoing computations. And will NVIDIA still be the one that develops the latest chip for this type of thing? Or will somebody else come in here and pick up some of that ground? There's discussion of AMD and other companies maybe making some headway on them. There's Amazon, Google, Microsoft, all trying to develop their own semiconductor chips to do this. NVIDIA's Blackwell sold $11 billion worth in the latest quarter. I had seen estimates that were half that. They really knocked the cover off the ball on this one. And like I said, there was really not a whole lot that I could see that was bad news here. Now, we talked about NVIDIA's sales rising by 78% in the most recent quarter. That is unbelievable news for any company out there. For Nvidia, it's just par for the course. This is a stock that has grown by more than 800% over the preceding 2 years. So, they have to grow at 78% if they're going to even reasonably justify their stock price. But all of the news here seems to be very positive. The CEO, Jensen Huang, was specifically asked, as expected, about DeepSeek and the AI developer that did spook some investors earlier in February. Was that the news that came out?
Yeah, late January, early February, we saw a 17% sell-off from NVIDIA on that news.
And reason being, the insinuation here is that DeepSeek was able to kind of create a shortcut and develop an AI model without as many semiconductors. And Huang called the DeepSeek innovation an excellent innovation, and that pretty much every AI developer out there was using techniques inspired by the development, but that these new models that are now being created everywhere at a lower cost and more efficiently need more computing resources, need more NVIDIA chips, and that continues to be the drive, at least the message from the CEO that, hey, any new, more efficient computation model is just going to bring us more customers. And he at least remains optimistic, which, guess what? His job is to be optimistic, so don't believe everything he says. But nonetheless, no real slowdown being seen here yet.
No, I think you make a good point, sort of describing the way that the industry has evolved, that there was a lot of focus on the creation of these models. Now the focus is much more on the operation of these models and using inference, so basically running the models versus just building them up. And so this Blackwell chip, from all early indications, has positioned itself really well to be able to do inference type of work, to be able to operate these models. All of the information that you read from this quarterly report is positive indications, whether it's the numbers on the financial side of things or just, of course, the optimism in general from the CEO. It is fair to point out, if you want to be devil's advocate or potentially a little bit of a bear case, is that this market is extremely competitive. And, Huang said the same thing too, that there is increased competition from Huawei in China. They also have domestic competitors, AMD and others. And there's startups in this space too, Mike, that are developing specific chips that have a designated use for specific types of computing. And when you're operating in a business that has margins of 80 or 75%,
they don't last long.
They don't last long, particularly when half of its data center revenue from NVIDIA comes from Microsoft, Amazon, and Google. And yeah, they have the pocketbooks to be able to pay a ton of money to get these chips, but you better believe in-house they're looking to do it their own way so that they don't have to pile up boatloads of money to pay for NVIDIA. So it's just they've done a great job positioning themselves. These Blackwell sales are really encouraging too. It seems like they continue to be the leader, but better believe that there is competition coming from them. It's just how long can they fend them off? And I would imagine that Nvidia will come out with an inference-specific chip too to fend off some of these competitors.
Nvidia reached an all-time high stock price on January 6th of this year, $149.43. Today, trading down a few percentage points, as we mentioned, off about 2% after gaining about that much yesterday. That's about a 14% level off their all-time highs back in January. And again, tough for me to know if this is a sell-off because there is some form of concern about these earnings. I believe they did mention that their expectations for Blackwell sales for the current quarter weren't quite as robust as the most recent one, which really knocked the cover off the ball, or if this is some reaction to what we're going to discuss next, which would be the implementation and announcement of new tariffs to go into place in less than a week. Let's take a quick break here on the Financial Exchange. When we come back, we'll be tackling that next ever-changing tariff story here on the Financial Exchange.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Oh, what a night. Join me on Sunday, March 2nd for the 29th Annual Ellie Fund Red Carpet Gala at the Omni Boston Seaport Hotel. Hi, this is Candy O'Terry, honored to accept the Ellie Fund's Ellie Popkin Award with WCVB's Karen Holmes Ward from this beloved nonprofit devoted to breast cancer patients and their families. EllieFund.org, that's EllieFund.org, and don't forget to wear pink.
If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks, but in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston where you can make a donation today and support programs such as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's dav5k.boston.
About a month ago, a little bit less than a month ago, early February, Donald Trump announced significant tariffs on Canada and Mexico. That morning, I was doing the show and recalled discussing these tariffs that were due to go into effect. We spent a lot of time going into them. And if gone into effect, they are substantial increases to products that Americans consume every day. Vehicle industry among the most heavily impacted, though, given how frequently parts cross borders in order to assemble a car here in the United States. Those tariffs that day were announced. Markets were selling off a good 2 percentage points. By 10:30, Donald Trump announced the suspension of Mexico tariffs. By, I think, 11:30 or noon, he announced suspension on Canadian tariffs as well, and markets flipped back. Yesterday, during a cabinet meeting, Donald Trump was asked about those tariffs and said during the meeting that, quote, "I'm not stopping the tariffs," but he later went on to say that Mexico and Canada would be implemented on April 2nd. It wasn't really clear based on all that commentary if that was just a slip, meaning, hey, I meant to say March, or if it was actually an intended statement to say April 2nd, because a White House official later on Wednesday said that the deadline for Mexico and Canadian tariffs remained March 4th. Donald Trump had not yet decided whether to grant another extension. Finally, this morning, at, I don't know, when did you see it flash across your screen? Sometime around 9 a.m.
8:55 or so, yeah.
A statement from the president stating that, no, the tariffs are in effect as of Tuesday of next week, March 4th. So whiplash a little bit here on expectations. Go ahead, Tucker.
So the exact post was the proposed tariffs scheduled to go into effect on March 4th will indeed go into effect as scheduled. And then he adds, China will likewise be charged an additional 10% tariff on that date.
So
that's 20% for anyone counting.
Yes, because the 10% initially.
Right.
So the tariffs that were implemented on Mexico and Canada were suspended. The ones on China were not. Those ones remained in effect a month ago, and an additional 10% would bring it up, 20% from where we were previously. I have no idea if this is real or not. I'm not going to guess. I'm done trying to figure this out. I will say something that is important to recognize. Markets, investors are not buying it. The S&P right now is up 0.1%. The Dow is up 0.75%. The Nasdaq's off a little bit, off about 1/3 of 1%. Investors are telling the president right now, we do not believe you. That is both dangerous for the president and dangerous for investors, I think, because I do kind of believe him. I do think that this is something that he wants to implement. I don't know how long it lasts. I do believe he views tariffs, and his cabinet view tariffs as a key instrument in order to raise revenue and bring jobs back to the United States. And we can have debates until our faces turn blue about whether that's a good idea or a bad idea. And there are people lining up. Economists mainly line up on the bad idea side of things. But again, this is all up for debate. What I'm making the point of is investors are not buying it. If you genuinely believed that tariffs were going into place on Tuesday of next week, I just cannot really justify General Motors being up by 0.5%.
I just was going to go there. General Motors and Ford, those are the first two companies that I went to look at to see how their stock was reacting to the news, because you would think they would be trading downwards with this news, because of the substantial impact. Ford and GM executives have been very abundantly clear that it would have a negative impact to their business and would throw their supply chain in a bit of disarray, and that consumers could expect to spend $4,000 or $5,000 more per car if these were in for a long period of time. So you're not seeing the market reaction, at least as it pertains to those two individual stocks that are pretty impacted by this initial tariff here.
Yeah. So again, I have no idea whether or not these will go into place. If they do, the auto industry in particular, because of the way that these tariffs have been talked about, it's not that, hey, in the total, any manufactured good that goes through Canada would face a 25% tariff. That's actually not how it works. Here's how it works instead. So General Motors needs to, let's say, import the chassis for the vehicle that they are manufacturing, and it comes over the border as just the chassis. That specific product is going to hit a 25% tariff. Then the way these vehicles work is they go back across the border, and some other part of the vehicle is going to get assembled in Canada when it's closer to finished. It comes back over. It's going to face an additional 25% tariff on these. These automakers will face substantial increases in costs if these tariffs go into place, and the mere fact that their stock is not reacting in any meaningful way, to me at least, speaks to investors not buying it. So, again, why I think that's a big deal is if markets aren't buying it, I doubt Trudeau and I apologize, the Mexican president's name is escaping me right now. I worry that this is not being taken seriously by investors, and that sets us up for one of two things. One, it could set us up for a market that is going to be substantially surprised when, in fact, they do go into place. Two, it could set up a president that feels like he needs to go and implement tariffs that he might not want to because nobody is believing it anymore, and he needs to regain credibility. So that's where things are on the tariff front right now. We will obviously know more on Tuesday of next week, March 4th, when these are due to get implemented per the president, and we'll cover it then. But for now, I have to just I get a little bit concerned when you see stuff like this where, quick market reaction. We did see the NASDAQ down about 1% earlier this morning. Right now, NASDAQ's barely down. It's off 1/3%. S&P's up more than 1/5% right now. And that is not how markets would be behaving, in my estimation, were they about to face tariffs on all products coming into the United States from Mexico and Canada. Anything else on tariffs before we move on? I know we're going to cover aluminum later. Go ahead.
I mean, if you're just looking back at the previous month when we did this, there was a report from that weekend heading into that initial deadline. So I would expect something similar this weekend. And I'm curious how markets would react on Monday.
Yep. Yeah, it will likely be ahead of all of that because I would imagine that this weekend will be a busy one for negotiation of all of this. Let's move on. There is also a discussion of aluminum tariffs that is making its way through. We will cover that later on in the show.
EU has also been mentioned in the mix, maybe a 25% tariff on the EU.
So that was part of the cabinet meeting yesterday as well, was, we have the Canada-Mexico tariffs, but remember, too, that there's been this discussion of reciprocal tariffs. Mm-hmm. And specifically what they mean there is there are countries that protect certain industries, frankly, as the United States does too, but there are countries that protect certain industries through the use of tariffs, and the EU is guilty of this. India is guilty of this. Many other countries are guilty of this practice. And the Trump administration has said, look, give us a little bit of time, but we are planning to implement these tariffs across many countries that have tariffs of their own on American products. And those, too, are in the works. There's a fair bit of discussion across the European Union in terms of how they would react to all of that. But all of this stuff remains in the works. And just genuinely, I wouldn't be surprised. I mean, we've already seen a change in the narrative this morning between yesterday's news and 9 a.m. this morning when the president, was it via social media post, Tucker?
Correct.
So I wouldn't be surprised if we have another announcement within the next few hours here, and we'll keep you appraised. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Busy day on Wall Street with markets in mixed territory as Wall Street reacts to big fourth quarter earnings from Nvidia, more tariff uncertainty, and economic data streaming in this morning, including higher than expected jobless claims. At the moment, the Dow is up by 0.8% or 341 points. S&P 500 is off by only 2 points. And the NASDAQ down by 0.7% or 135 points. Russell 2000 is off about 0.25%. 10-year Treasury yield up by 4 basis points at 4.29%. And crude oil up over 2% higher on the day, trading just above $70 a barrel. On the heels of their anticipated earnings report, Nvidia shares down by 3% after the chip and AI giant reported sharply higher sales and profit for the previous quarter, but a narrower profit margin. The company also offered a better than expected outlook in revenue for the current quarter. However, Nvidia did acknowledge that global competition was ramping up. Meanwhile, shares in Salesforce pulling back by 3% after the software company's fourth quarter revenue missed street forecasts. The company also offered weaker than expected guidance. Another software company also reported earnings as Snowflake posted a big jump in quarterly revenue, but a wider loss than a year ago. That stock jumping by 8% on the day. Elsewhere, eBay down by 9% after its first quarter revenue guidance fell short of expectations. The e-commerce giant did, however, beat fourth quarter estimates. Jefferies upgraded Freeport-McMoRan to buy, with the firm cited improving free cash flow trends as well as cost reductions as growth catalysts moving forward. Freeport shares are up by 1%, and shares in Warner Brothers Discovery jumping by 6% after the media giant said it added 6.4 million global streaming subscribers in the previous quarter, bringing its total to about 117 million subscribers. Streaming segment's revenue, anchored by Max, totaled $2.65 billion, up 5% from the same period last year. I'm Tucker Silva, and that's Wall Street Watch.
Tucker briefly mentioned the weekly jobless claims that we saw. Paul, when we talk about economic indicators that we get, we kind of lump them into leading, coincident, and trailing indicators. A leading indicator would be the stock market. It would be something like sentiment expectations on behalf of consumers are considered leading indicators. Coincident would be jobless claims. You're getting it pretty much live. This data that we collected, that the Bureau of Labor Statistics collected anyway, was as of the week ended February 22nd, so just a week ago. And then your trailing indicators would be something like GDP measurements, right? When you get a measurement of how much did the economy grow in the most recent quarter, doesn't really tell you anything about the future. The weekly jobless claims were elevated for the week that ended February 22nd. This is a reading of how many people actually filed for unemployment at the state level. All the states put the data together, give it to the federal government, and they put these numbers together. Initial jobless claims came in at 242,000 claims for unemployment. That's an increase of 22,000 from the previous week's level. It brings the previous week's level was also slightly revised upwards, and the 4-week moving average is now sitting at 224,000. So to contextualize this, this, at least for me, is not a significant increase of concern, but if, for instance, you saw this hovering around 250,000 jobless claims for a few weeks, you start to get to a point where the unemployment rate is going to creep back up. And that is where I would start to grow concerned, and where I think some consumers and individuals out there are concerned that, hey, are you going to start seeing unemployment creep up because of federal government layoffs, because contracts and things like that are being canceled? What sort of downstream impact do we have to employees out here? This is one data point. Don't take it as an alarm bell. in and of itself. But, this is definitely something to monitor because it is the fastest way I know of anyway to monitor the unemployment situation in the United States. The weekly job or the monthly jobs report is a more all-encompassing area and way to do it. We'll get that on Friday of next week for the month of February. But this gives you rapid series of data in terms of, weekly jobless claims, where they come in, how are we seeing this stuff? And so I would say, not quite an alarm bell, but certainly, smelling a bit of smoke here and something to keep an eye on.
Yeah, I think it's something that's worth monitoring. You hit kind of the major points that I would want to cover on it. One last data point, the amount of people receiving unemployment benefits for the week ending on February 15th, that did decrease to 1.86 million. So we'll get more.
So those continuing claims. Yeah.
Exactly. We'll get more context on it next Friday. The jobs report is the one we lean on probably the heaviest, I would say, from all these indicators.
So for the last week or so, the concern has definitely not been about inflation. The shift that you have seen over the course of the last week has moved from, maybe the economy is overheating, to bonds, interest rates coming down, bond prices getting bid up, stock prices coming down slightly, and sentiment across the U.S. population moving away from inflation concern and more towards recession concern, I think is the only real way to put it. That was what I saw from the University of Michigan Consumer Sentiment Survey, as well as the Conference Board's Sentiment Survey, both of which showed steep drops in sentiment on behalf of consumers that were polled. I've said before, and I'll say it again, I don't know that actually leads to a recession. I think very frequently we've seen examples where people get nervous about the economy and then are proven otherwise after time goes on. But one area that we do have hard data on remains prices. And in the month of January, we saw prices shoot up pretty significantly. You had overall prices shooting up by 0.5% in the month of January. If you strip out the volatile food and energy, because food was a key component of this with egg prices through the roof, even then you still saw prices shooting up 0.4% in the most recent month. And again, this hasn't been the biggest concern according to consumers, but as these egg prices continue to climb, as you're still not seeing much in the way of housing activity, inflation has heated up again in the month of January. But this piece from Bloomberg, I don't know, to me it feels a bit overstated right now. I'm not as concerned about a big inflation overheating right now, at least.
I would agree with you. I think that it's how much weight do you want to put into the seasonality impacts on that January report, which spooked people a little bit. The headline print on that January report was 3% year over year for inflation increase, but there was a lot of questions that arose from perhaps the impacts of the seasonality adjustments on that data. When we get February's report, which that's probably a couple weeks away, then we'll get a little bit more clarification. It is worth noting, as much as there may be some anomalies on the data for the month of January, the prior months in December were trending a little bit more sticky in terms of inflationary numbers. We were really in a much better place in the fall, and now you have all these different factors that we're combating that could lead to further increases, but I'm not panicked, ready to panic yet.
Let me just read out for everyone the month-over-month increases from July through January. So July, 0.1, August, 0.2, September, 0.2, October, 0.2. Pretty reasonable trend there. November, 0.3, December, 0.4, January, 0.5. That's what we're talking about when we talk about inflation heating up, right? Those are the month-over-month bumps in prices, and you are seeing a reasonably rapid increase there. We will see where it goes. I tend to also think that the shelter stuff that they mentioned here, housing is outrageously expensive across the country, don't get me wrong, but you are starting to see some more matchup of buyers and sellers, especially in the South. According to the USDA, the Agricultural Department, the price for eggs, which is already outrageous, could soar an additional 40% in 2025. That's from the Trump administration's Agricultural Department. They have put together a plan to spend an additional $1 billion to try and fix some of this issue, but everything that I have read speaks to a long, drawn-out process to address the bird flu issues that we are seeing. So the money that was going to be spent will be spent on tightening up biosecurity at farms, continuing to pay farmers for slaughtering chickens that come down with bird flu. But none of this speaks to a rapid solution to all of this. There's also been discussion of importing eggs from overseas, vaccinating flocks, which farmers are very hesitant to do because certain foreign countries won't buy your eggs if your chickens are vaccinated. I don't know that this is a quick solve solution.
The only reason I'm chuckling is I was on with Chris Ryan this morning on one of our New Hampshire affiliates, and he gave me the imagery of the birds masking up and, everyone getting their shots administered. And I immediately had to say to him, you know what? As much as I'm mentioning the idea of vaccines, what the heck do I know about bird vaccines? To be clear, based on what I've read, there are none that are approved at the moment, and the prototypes aren't practical because you have to individually shoot up each bird. And so it's just a territory that, it's not our day job at all. But the bottom line is there isn't a near-term solution. And this is where you get into inflation, where the president can't have an impact. And I don't care who's in office. There is no fix that a political figure can have to rework the supply chain when the amount of consumption of eggs that we have in this country and the amount of production, that just can't be unwound. And that's the tricky part with inflation in general, is as much as you can make policy changes and the Fed can utilize its tools, sometimes these things are just beyond your control.
Last month alone, farmers slaughtered nearly 19 million egg-laying chickens. That is a steep number and speaks to the effort that is ongoing on this front. Let's take a quick break. When we come back, Microsoft urging the administration to curb some of their chip exports that were put in place under the Biden administration. We'll be covering that next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports.
From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Microsoft is urging the Trump administration to overhaul their curb on AI chip exports. If memory serves me anyway, these were rules that were put into place under the Biden administration when it came to tiering out different countries and their export controls on U.S.-made chips of different sorts. And specifically, it put a few countries that would generally be considered close allies on a second-tier list. India, Switzerland, and Israel, for example, are countries that are in that second of a three-tier system that underpins the export controls. And Microsoft's main argument is, well, self-interested because they have relationships with all businesses in all of those countries and, want to maintain those relationships. But also, I think practical, which is to say that if these countries cannot buy Nvidia-made chips or AMD or other major U.S. suppliers of the latest and greatest semiconductors, they will eventually turn to China, who is not that far behind us in the development of these.
Yep.
And so that seems to be a lot of the concern here. But again, I think let's contextualize this.
That there is some self-interest
by
Microsoft.
There's a fair bit of.
Yeah, I think it's strategically from a country perspective, it's hard to navigate. But ultimately, if AI is going to be the next frontier of sorts or another golden age on top of what we saw from the internet, you'd like the U.S. to be the most dominant player, and you'd like other countries to adopt as much of our policies much of our technologies as possible. So whether that's chip use, and particularly our allies, we do not want China being sort of the main resource to go to from a technology perspective in this arena. So this is, the push that Microsoft is making, particularly to open this up a little bit to our allies in order to let them have access and not have them turn to China. Obviously, there's self-interest behind it, but I can kind of understand the strategic piece too from the United States perspective.
The calendar is turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Tucker, I have a question for you.
What?
Prior to putting this story that we're about to read about an economic blackout in front of me, had you ever heard of John Schwartz, People's Union USA, or the No Shopping Economic Blackout coming out on February 28th?
Nope.
Okay.
Learned
Paul,
about it 3 hours ago.
Paul, I have a
4
question
hours
for
ago.
you. Do you know any human being alive that reads more news sources than Tucker Silva on a daily basis, that scours as many different publications to find content for this show?
He's in the top 1%, I would think.
Okay, so then this isn't going to happen. Let's talk about what it is, and then we'll just move on. Because if Tucker had never heard of this prior to today, then nobody else knows.
I was like, what the hell is this thing?
So John Schwartz is the founder of People's Union USA and lives in the Chicago area. The 57-year-old meditation teacher.
Of course, meditation teacher.
Came up with the idea to basically just spend no money on February 28th. And look, if done, this would be a very significant message to corporations across the country and across the globe, quite frankly, of, hey, U.S. consumers have a lot of power and you should listen to us when we talk about our demands when it comes to all of this. He's calling for a social media campaign that he started for an economic blackout on Friday, which, by the way, is just one of several boycotts planned by those activists over the course of this year. The union bills itself as a nonpartisan grassroots movement dedicated to economic resistance. And as I mentioned,
Mr. Quebec over there, his French accent.
Whenever I hear resistance, I have to give it a French accent. Yeah, this isn't going to do anything. Again, if Tucker hasn't heard of it, and this is like economic news, right? This is a big push. It's gotten a big social media following. This is not going to do anything at all. And I, for one, am hosting some people at my house for dinner on Friday, and I don't know that I'm going to be able to buy my food on Thursday.
Well, you got to make whatever's in the pantry then, Mike. You can't go out and buy anything for your dinner.
Enjoy my somewhat
casserole.
Wrinkly apples and tuna casserole with mac and cheese. That's what you're getting for dinner, and you're never coming back.
Cinnamon Toast Crunch. Hope you like it. That's all we got.
Yeah, look, I mean, American consumers have an immense amount of power, and if we all agreed to not buy stuff, then it would send a message. But the problem, too, is what exact message are you attempting to send? What was the behavior that you don't like out of companies that you are trying to correct? Because, again, if you're this nonpartisan institution, I'm assuming it's not DEI and it's not, I don't know, whatever the other main issue is from corporations these days. Let's take a quick break. Markets remain confused. We'll cover markets and a whole lot more next on the Financial Exchange.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Did you outgrow your timeshare and now you want out? but you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth, that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. If you happen to be just joining us, we have a few big stories of the day. Nvidia released earnings last night after the bell, generally reporting very solid earnings growth. 78%, I believe, was the headline revenue growth number. Nonetheless, stock is off 3.6% this morning in early trading after being kind of all over the place last night and this morning, but it was up in pre-market trading and then has fallen a bit so far in early trading prior to the noon hour. We also had a bunch of different conflicting stories when it came to tariffs. So yesterday, during a cabinet meeting, Donald Trump specifically stated that April 2nd was their implementation date for tariffs on Mexico and Canada, as well as potential reciprocal tariffs on a number of other countries, as well as increased tariffs on China, too. This morning, via a Truth Social post stating that no, in fact, those tariffs are still to be implemented on Tuesday of next week, which would be March 4th, which would be 30 days prior to after the previous announcement of Canada and Mexico tariffs. Markets immediately on that news started sinking. We've got now the Dow up 300.7%. S&P basically flat for the day now, off 4 points, a little bit less than 0.1%. And the NASDAQ still moving down on the Nvidia move, down 125 points or 2/3%. Paul, what are we seeing on bond yields at the moment here? That's been a big topic over the last 4 days. U.S. Treasuries.
U.S. 10-year Treasury up 3 basis points at 4.28%. And have to take a look at the 2-year, which kind of ties into one of the pieces we have to cover here. But geez, Mike, I feel like you need like an oxygen mask after going through all the tariff news. Because
I did. You can hear me breathing heavily.
It's just like exhausting, all the back and forth. It's just like you need a break, like you're walking up a mountain, just to summarize all of it. But
the good news on the interest rate side, you do have the 30-year fixed rate mortgage dropping now to 6.78%. That's according to Mortgage News Daily. And oil prices, which have been moving down over the course of the last few days, spiking up again today, up 2.2%. Obviously, that has something to do, again, with tariffs on imported oil from Canada, should those actually go into place. So, again, things are moving very rapidly here. Yesterday, we thought it was April. Today, we think it's March. We will see on Tuesday of next week. There's oftentimes, as Tucker mentioned in the first hour of the show, progress made over the weekend prior to implementation here. And so we'll be looking for announcements tomorrow and leading up to Tuesday of next week when it comes to these tariffs. Tomorrow, we will get an inflation reading, the Federal Reserve's preferred measure of inflation through the Personal Consumption Expenditures Index. That's released tomorrow at 8:30 a.m., if I'm not mistaken.
Yep, correct.
And then Friday of next week, we will get the monthly jobs report. And the following week, I believe, we'll get some CPI data as well as a Federal Reserve meeting coming right up. So plenty to digest. And again, the narrative that has been gripping markets over the course of the last few days anyway has been a recession fear. And that's been prompted, at least in part, by 2 surveys, one done by the University of Michigan. It's been a consistent survey that's been done, I believe, since the 1950s or 60s, asking people how they feel about the economy. And then the other one from the Conference Board, asking people how they feel about the economy, both taking a sharp nosedive in the collection period, which was January, February timeframe, in terms of consumers' expectations. We have another recession indicator that is once again flashing, though, Paul, that is not about consumer preferences and indications, but actually a hard data signal about the yield on treasuries. So talk to us about that one and whether or not we should be paying attention to it this time.
Yeah, so there's this phrase that you'll hear out there, which is called inverted yield curve. And very simply what it means is that you can get a higher rate of interest buying a U.S. Treasury 2-month, in this case they're talking about a 3-month note versus buying a 10-year Treasury bond. So right now the U.S. 3-month Treasury, I believe, is sitting around 4.25 or something like that, and the U.S. So it's actually 4.3%, and the U.S. 10-year Treasury is sitting at 4.28%, but it was down 4.25 earlier this week. So basically this idea that you can commit your capital, receive a higher rate of interest for a shorter period of time rather than what you'd get on the longer end of things, a 10-year Treasury bond.
And that's generally abnormal, right? If you would think about it for a moment here, if I am making a loan to Paul for a decade, I'm going to require more interest over that period of time because I am not able to loan my money out elsewhere. There's a higher risk there compared to saying, hey, Paul, you can have this $1,000 loan for the next 3 months. I probably won't demand quite as much interest in that case. We have the reverse right now. A 3-month loan is paying more interest today than a 10-year loan from United States Treasuries, and that historically has been a negative indicator for the state of the economy because what it speaks to is such gross fear about the short term that people are saying, you know what, look, I know the interest rate's better on the shorter term, but I'm willing to take the 10-year because I'm uncertain about what comes next, and I don't want to be left holding the bag 3 months from now when the U.S. government pays me back.
Right, and so this one that they're speaking of here, as I alluded to earlier, is 3-month versus 10-year, but oftentimes you'll hear more frequently talked about the 2-year versus the 10-year. The reason that the Federal Reserve cares about the 3-month versus the 10-year the most is because they have the most direct impact and not direct control, but significant influence on what that 3-month interest rate is. When we talk about Federal Reserve and interest rate cuts and things of that nature, that is more specific and tied into the 3-month note. So it bears mentioning that we've had this previous inversion since October 2022. We had the same phenomenon occur, and here we sit 2.5 years later, and as much as consumers might be frustrated with the inflation impacts, there has not been a recession. In fact, the U.S. economy, by all metrics, has been in a really good place over the course of the last couple of years.
Yeah, and we've talked at length about this, Paul. There have been recession indicator after recession indicator that have flashed warnings over the course of the last 5 years, and really none of them ended up being accurate predictors. The 2-10-year Treasury yield inversion, when we talk about data when it comes to U.S. manufacturing, that has historically been a fairly good indicator of sorry, there's just a hammer swinging here somewhere. When we talk about the ISM manufacturing index and the negative sentiment there has been a relatively good read of recession. Heck, we had the SOM rule, right? The unemployment rule when it came to moving averages of unemployment, which was a perfect recession indicator for years, none of which worked over the last 5 years. So it's easy to look at this one and say, well, hasn't worked for the last 5. Plenty of issues of false positives of the course of history. Probably just more of that. But I hesitate to very easily dismiss all of this, right? There was, let's call a spade, a lot more economic influence on behalf of the government in 2022, a lot more stimulus and interference in free markets over the course of the last few years than there is today. And so just waving this away and saying, oh, it's not important because it didn't work last time, I would hesitate on that front. I do think that this is a general indication of investor nervousness. And that's all it is, right? Investors are choosing to buy more 10-year yields than they are 2 years or 3 months, rather, in this case. Will it result in a recession? Heck, I don't know. But I don't think we should easily dismiss it as just a broken indicator.
Yeah, I'm going to need to see some more hard data to really get to the point where I'm of concern, because all the stuff that we've been talking about this week, Mike, is consumer sentiment, or it's, investor sentiment. It's people, how they feel about things, and interest rates too, at least like there's numbers behind that. But I'm going to need to see more things on GDP, the job market, inflation. Those are the things that we're going to need to really see some more numbers on before I can get behind the nervousness. I agree. We have to summarize. That is what's happening. There is some nervousness in the market, but we need some hard numbers behind it.
I'm with you. Yeah, just because somebody tells you they are pessimistic doesn't mean they will act as such. But this is at least some confirmation of investors acting as such. They are telling you with these moves, I'm nervous about the short term, so I am piling into long-term treasuries. So this is, again, we had soft data on sentiment, and this is a confirmation with people putting money where their mouth is when it comes to sentiment as well. Let's take a quick break. When we come back, I want to talk a bit further about those bond yields and what we're seeing in particular. Treasury Secretary Scott Bessent has been hoping to get yields lower. Is this what he was looking for? That's next, along with trivia on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other. and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visit usvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025. Time for trivia here on the Financial Exchange. And sad news as we learn that Gene Hackman passed away at the age of 95. Hackman starred in hit movies in the 60s, 70s, 80s, and 90s, and early 2000s before retiring in 2004. He was nominated for 5 Academy Awards, winning twice. So, trivia question today. What was the biggest box office hit of Gene Hackman's career? Once again, what was the biggest box office hit of Gene Hackman's career? Be the 4th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the 4th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Treasury Secretary Scott Bessent has spoken very publicly about interest rates and why he wants them to come down. And I think in part trying to kind of turn the Donald Trump narrative around, hey, I want the Fed to lower interest rates. Scott Bessent taking the approach of, look, we've seen them do that in the last half of last year. And in fact, the rates that people care about started going up in the other direction. And so he has been really focused on, hey, how can we make steps such as cutting government spending that might eventually bring down longer term interest rates. He's getting some of that this week. And I don't think it's for the reasons that he was hoping for, would be my general takeaway. I do wonder how he's looking at the movement most recently.
No, I think that Mark on yesterday's show was analyzing the action that we had seen in the TIPS market, the Treasury Inflation Protected Securities, where it seemed like a lot of the interest rate movement that we've seen on the U.S. 10-year retreating has been from, more people piling, and rather than there is this concern about longer term inflation like that. It seemed like more of a retreat to safety based on the things that he had taken a look at. And that's what the really challenging thing is on the interest rate front, is the longer end of the curve. Really, no political party or the Federal Reserve can have a significant impact on how that flow ebbs and flows. And that one, the U.S. 10-year Treasury, would be the most important catalyst to getting the 30-year fixed mortgage down, and as a result, potentially stoking a housing market that's been relatively dormant over the course of the last couple of years, really.
No doubt. The Financial Times asks today, why is America still building houses in climate danger zones? And they wrote like 7 pages on this, and the answer is really, really easy. There are 2 reasons. One, it's pretty. Honestly, it is really pretty to build in climate danger zones. They tend to be in forested areas or on waterfront property. It is gorgeous to build in climate danger zones. And the second reason that America is still doing it is because state, local, and federal governments subsidize it. So let me use my own example here. I've been pretty public about how I'm a cheapskate when it comes to cars and things like that, but I'll state that my home is beautiful. I back up to water. I back up to a river. We have this gorgeous view. I see hawks and eagles and beavers. It is a very nice home to live in, and we have this wonderful, quiet setting that we are on.
It's all right.
Unfortunately, we're also in a flood zone. We're in an AE flood zone. And that means that there's a 1% chance every year that we might flood, a 26% over 30 years. When I go take a look at my Redfin listing for my own home, they call it a severe flood factor. And Redfin, at least on their webpage when I'm looking at my own home listing, says that there is a 100% chance of flooding in the next 30 years. And I've experienced it. Over the course of the 5 years that I've lived there, our backyard at least has frequently flooded from, rising levels of the Charles River. I pay for flood insurance. I am required to pay for flood insurance. Nice home, have flood insurance that would protect me if my home got damaged. The annual premium on this flood insurance policy that protects me is $1,430. It is nothing.
Wow.
It is nothing because the federal government subsidizes it and says that they are not allowed to raise the premium on me, and so the federal government pays the difference. If you are listening to this program right now and pay taxes, you are personally subsidizing me living in this home because I could not buy it if I did not have the flood insurance. And I would not have bought it had the flood insurance policy been probably appropriately priced somewhere in the $10,000 plus range. Instead, I got a grandfathered policy that keeps this premium under $1,500 a year. And I am not alone in this. Go look across Florida, across California. The number of people who cannot buy and own homes in those areas unless the state steps in and provides insurance on their own at a subsidized rate. It's a lot of people.
I have heard feedback that those flood insurance policies down in Florida have been useless. They just have not. Some homeowners to me have complained that they just have not been as effective as they would have thought.
Yeah, and there's a number of reasons for that. They carve out a whole bunch of things that wouldn't be covered, and I forget how it works. If your home is damaged because of a hurricane and it tears off the roof and your whole home floods, well, guess what? You're not covered. Whereas if rising sea levels do it, then you are covered in that case. How you define flooding is very specific. And in some markets, these are being appropriately priced. In some markets, you can't buy flood insurance at all. In some markets, they have kind of let free markets dictate. But again, what I find fascinating about the insurance market is time and time again, whether you are left of center, right of center, libertarian, governments across the country, and I am more talking about state governments here, have come up with the same solution. We've got to subsidize it. If we don't subsidize it, we're going to lose all of our citizens, and so we have to step in here and, in Florida's case, become the insurer of last resort through Citizens Insurance, I believe it is. And in California, we're seeing this now with the wildfires, a massive number of policyholders being on the California insurer of last resort. Call it subsidies, call it whatever you want. The fact remains that in some of those markets, those insurers, the private insurers, have said, we are unwilling to write policies in this area, and the local government has come up and said, we'll do it instead.
One statistic that I just want to mention before we head to break here that blew me away is that in 2014, 49% of the single-family homes that were being built were in zip codes that were deemed as severe or extreme risk of climate disaster over the next 30 years. You'd think, over the last decade or so, that percentage has come down. Nope, it's gone up. It's closer to 60% as of 2023. That blew me away, Mike, because you think it would have come down, but people aren't changing the behaviors.
No, and again, it's for the reasons I mentioned. Yes, it is beautiful, and all of us as taxpayers subsidize people like me who sit in a flood zone. Quick break. We'll have the trivia winner when we come back, and then the Social Security Fairness Act, a little bit update on payments if you're to receive them. That's next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was, what was the biggest box office hit of Gene Hackman's career? That would be Superman, which grossed just over $300 million worldwide, and Hackman played Lex Luthor. Winner today of the Financial Exchange Show t-shirt was Pat from Sandwich, Mass. Congrats to Pat, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
We've talked a fair bit about it over the course of the last month and a half since the law passed, but the Social Security Fairness Act is now in effect, and the Social Security Administration is trying to figure out how to make payments to more than 3.2 million individuals. I want to cover the basics, Paul, first. Can we run through what exactly the Social Security Fairness Act did that was signed into law under President Joe Biden on January 5th?
Yeah, the first thing is it eliminated what's called the windfall elimination provision, or the WEP, and the other one that it also eliminated was the government pension offset. These two laws had been signed in late 70s, early 80s, where basically the two principles behind the two laws is, let's say you were a municipal worker, you were a teacher in the greater Boston area and collected a pension from your specific school district. Any Social Security benefit that you would be entitled to, perhaps because you had a spousal benefit from your husband's work history or your wife's work history, that would be dramatically reduced because you had this other municipal pension in place. The other one in effect was the government pension offset, which was more specific to the amount that you'd be able to collect because you were collecting a government pension. So that was basically what was undone by this most recent act that was signed into law on January 5th by President Biden, and really has a big impact on a lot of people around the Massachusetts area.
Massachusetts, Maine are two big states that it's affected. And the reason why, again, is in these two states, among 7 or 8 others across the country, all state employees pay into the pension system instead of Social Security.
Right.
And so it is a big potential effect. I was meeting with somebody just this week, actually. Husband was a full-time federal government worker for his entire career, receives a pension for his work that is substantial. It's equivalent to more than what most people get from Social Security. And because of that, he never paid into Social Security. He was not eligible to receive any Social Security. And even if his wife, who did work in the private sector, got Social Security, he wasn't going to get much. His wife worked in the private sector for a number of years, then switched to the state of Massachusetts and was doing some work there where she's eligible for a pension. Now she's going to collect a pension from the state. She's going to collect Social Security from the federal government. And now, because of these changes, the husband who worked for the federal government for 4 decades
can take half of hers.
This is going to be $20,000-$30,000 a year of additional income that these two were not previously entitled to. It's a massive windfall for a number of Americans. And by the way, it goes back to the beginning of last year. So there's going to be a one-time payment that is issued. Social Security Administration said that they were going to take quite a while to make those payments. As you can imagine, it's a bit complicated to retroactively calculate how much it was going back to January of 2024. But in a new update released on Tuesday, the administration said it will begin issuing these retroactive payments in February.
So like tomorrow?
Right? Yeah, they're going to begin in February. Then, yeah. Tomorrow, you got to get the ball rolling here, Social Security Administration. I guess a few things about this. One, it is going to take a little bit of time. Two, if you have never filed for Social Security before and the Social Security Administration basically just doesn't have any record of you because you weren't eligible, you will need to actually process an application here. For most people, this just eliminated some of their Social Security benefit, and so it's a makeup for the difference. For some folks, though, like the person I was talking about, they've never really had anything with Social Security Administration, so they're going to need to apply for the first time. Big picture. This changes a lot, especially for workers around New England in terms of what type of work they do, who they work for. And I can tell you firsthand that these laws that were previously on the book absolutely did influence where people would choose to work and for how long. If you are maybe working for a local or federal government, if you are considering doing work for one or the other, or considering a career change at this point and are wondering about how these rules could change the narrative for your financial strategy and retirement plan, please give the folks at Armstrong Advisory Group a call. As I mentioned with the folks that I was working with earlier this week, there are big implications for people's retirement plan when it comes to how these rules work out. And if you have questions along those lines, we'd love to guide you through it. The number for the Armstrong Advisory Group, it's 800-393-4001. We have live human beings stand by to take your call and help you walk through this overall process and schedule ultimately a consultation with one of our advisors to sit down with you and make sure you understand how all of these different complicated rules regarding pensions and Social Security could benefit you. The number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The number of 401k millionaires, according to Fidelity, rose by 27% in 2024. Good news, bad news, or unimportant news to you, Paul?
In other news, the market went up, and that's why more people are millionaires. Yeah. It does probably speak to the fact that we have more and more track record of people participating heavily in 401ks. So you're going to see more people hitting that seven-figure mark. But other than that, it's just
it's an effect of the stock market going up.
Exactly.
The interesting pieces around this is, how do people deal with that? Are they really aware of all of the ins and outs of those 401ks, their required minimum distributions and things along those lines? And it does get a little bit complicated. I also do wonder, you spoke to the prevalence of 401ks today compared to 20, 30 years ago, most certainly. The disappearance of pension funds over the course of that period of time and a replacement of it with 401ks. And that's been one of the theories that's been at least tossed around there when it comes to equity market valuations. So if you think about this massive 401k universe, the participants generally invest a lot differently than a pension fund does.
Sure.
Pension fund tends to, it's very professionally managed. They're very large. They're very risk averse. They have specific rules that they have to follow. A 401k has none of that, right?
Mm-hmm.
Like it's self-directed by the individual. Yeah, a lot of people end up in those target date funds, but even those invest a fair bit differently than your pension funds. And so the theory's been floated that, hey, part of the reason we've seen valuations since the 80s go up substantially and not really return to the pre-80s norm has been, hey, is there this just permanent buyer block of stocks with 401ks that are not price averse? They're not paying attention to valuations. They are just every week tossing money into that 401k automatically, no matter what. I haven't really thought it through all the way to determine whether or not that's a factor. I mean, obviously, you've had the baby boomers kind of moving through that population gap. And so I would suspect that if it were true, you would see it reverse as those same baby boomers spend that money over time. But it's at least an interesting query, because we talk a lot about how valuations are so elevated today. And whether you compare that to the last 20 years, 30 years, or 100 years, they're substantially elevated compared to those levels. But is 50 years ago even a relevant time period to compare to? I think it's kind of an unanswered question at this point.
It's a great point and great exercise to go through, because the adoption of the 401k, I'd be ballparking a percentage of participation, but it's got to be 2/3 of most workers that I would think participate in 401ks
or some other voluntary retirement plan,
right?
Yeah.
And so it's always interesting when we have to do these forms for our clients when they get on, and it goes over their investment history and experience. And so for those people who started working perhaps in 70s, 80s, things like that, they may have lesser experience than the default today is pretty much any 25-year-old you're talking to is immediately enrolled within their 401k. And so, there's certainly a point to be made that there's a lot more buyers who are coming in every 2 weeks when they get that paycheck contribution.
Let's take a quick break here on the Financial Exchange. When we come back, we will update on you on markets before we close out the program today, but Stack Roulette is next.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Understanding the costs of Medicare can be complicated. Hi, this is Chuck Zada from the Armstrong Advisory Group. Medicare was originally a 2-part program, but is now 4 parts, and making sure you know what you're eligible for and how much you'll need to pay is key to having the right healthcare coverage as you get older. Medicare is divided among parts A, B, C, and D, all of which have different premiums, deductibles, and coinsurance. Our new guide called Understanding Medicare, Essential Questions Answered, can help you learn about these issues and others, such as whether Medicare pays for long-term care. Call the Armstrong Advisory Group at 800-393-4001 and request your free guide today so you can determine which plan works best for you. That number again is 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Time for a little stack roulette here, Paul. What do you have for me this morning?
Hey, Alexa, do you finally have a real business model? This is a piece out of Bloomberg. Kudos.
As Paul angers everyone who's listening to the radio right now with an Alexa device.
See, that's the thing, Mike. I don't think anybody is.
Yeah, that's true. Nobody has one.
We like have one at the house, like one of those Echo, whatever it is, Echo Show. I think that's what it is. My kids ask it animal facts. That's what we use it for now.
I set timers with mine.
I stopped doing that. I just use my phone now. I used to use it for timers and music, but now we don't use it at all. So, sorry, continue, Paul.
No, it was a fantastic headline. So, kudos to the Bloomberg writer who put that together. But basically, as you guys just alluded to, there wasn't really a business model behind Alexa. Now,
well, I think they hoped for one. It's just that nobody wanted to use it.
It didn't materialize the way that they expected, which I think
because they subsidized the heck out of these things, right? Like, how much did that Echo Dot thing cost? Like $15 or something like that.
It was cheap, yeah.
And it's pretty complicated technology. It's got to connect to Wi-Fi. Like, it's really, really cheap. And I think they were hoping that people would be interested in like shopping via voice.
Yeah, they want to speak their Amazon orders into Alexa. But
as
no
it turns
really
out,
did that.
Yeah, nobody wants to do that.
So now that they are utilizing, the idea is to utilize AI to have a more of a business case use for Alexa rather than the previous one. But, it's to be determined really if this is going to be something that is accretive to this business that has been kind of a lagger for Amazon in general.
Yeah, they're rolling out a couple of things. They are rolling out a ChatGPT style, like web-based generative AI tool, and they're trying to make really just Alexa smarter. But my point would be, unless somebody's willing to pay for that, I don't know how it helps. And I'm not willing to pay for that. I'm not willing to pay to say, okay, Alexa, I'm actually genuinely curious in having this conversation about something that you're smarter about now. I'll probably look it up.
Yeah, I just don't think, like, one of the questions that they posit here is, can I install a solar panel on my house, is a question that you would ask it. I just don't think that the verbal communication between Alexa is going to be the medium that you're going to choose to have that done through. I think you'd much rather use just ChatGPT and read through the response rather than having to have it spoken out to you.
Yeah.
Or like,
Or
the
neither.
other one they say is when is football practice, like this other one. Like,
actually, so one area that I think might be useful would be if it does a better job of, let's say, like taking all of your email, reading through them, and putting together a calendar for you. Like, as a parent of 3 kids who are in activities almost every single day, like Monday and Wednesday are the only days that my kids do not have a long laundry list of things to go to. Okay, yeah, I could get on board with that because I am constantly asking my wife, where do we need to be at what time, because she is the holder of the calendar.
Right.
So if you can figure that out, then I might be willing to pay for it. Otherwise, I don't know that you have a whole lot of a business model here. Steep drops in credit scores are being realized by some student loan borrowers across the country because 43% of those who owe payments have not yet resumed making them. This was a COVID-era rule that got extended probably more times than it should have been. But beginning in October, the pandemic-era relief on federal student loans ended, and it started this 90-day clock where people had to make payments before their credit scores would start taking a hit. They needed to start making the payments beforehand, but if they didn't by that period of time, then their credit scores were going to start getting whacked. And so they interview one woman from California who saw her credit score drop by 100 points. She discovered that she was more than 90 days delinquent on payments for her $16,000 in student loans, to which I say, and quote, "I'm devastated. It's like having your whole life put in limbo over a simple mistake. How did you not know?"
It's not a simple mistake.
I know that
it's not.
Okay, so I have to take a step back here and recognize that the 3 of us read about these types of things far more frequently than the average person, and so I always have to put myself back in the average person's shoes who's not listening to this stuff. But this was not a secret.
Right.
This was really, really public. The Biden administration lost a Supreme Court case over this stuff. How are you not paying attention to this?
These companies are sending out notices too.
They're sending out notices. I get it. You might have
the amount of
moved
stuff you get in the mail. It's just from all the companies you owe money to. Like, if you owe someone money, you get notices for sure. And it's not just all e-delivery. They come at you with paper too. Like, I can't get behind that.
And look, I know people move. I know people miss these notifications, but you know, if you have $16,000 worth of debt, you do.
And
you do.
I'm not going to criticize whether or not it can be paid. That's everyone's individual financial situation. But don't tell me you didn't know about it, because that's the responsibility that you take on. Borrowing debt is you got to be aware of it. And I find it very difficult to believe that there would be no notification that you'd receive, whether it be an email or something through the mail. They're going to let you know.
Poor woman Scrooge. She was trying to buy a home. Her mortgage broker had to inform her that, the lower credit score is going to knock on an additional $400 a month to her mortgage payment if she goes and gets one now. So totally devastated by this. But again, you have to know these things. You have to keep track. This is like personal finance 101. Know what's coming in, know what's going out.
Right. Just crazy. NFL teams gather detailed consumer data without standard notice or opt-outs. That's so strange. The NFL is always so run on the up and up. It's shocking to hear such a invasion of privacy by the NFL. Tongue-in-cheek, obviously a lot of sarcasm there. I love the NFL and consume it most Sundays, but we can agree, most of us, that some of their practices over the last decade or so haven't been the best. And what we've seen from this most recent piece here is that for those people who had their NFL app, they were gathering all sorts of marketing data and information regarding its consumers that violated the digital advertising accountability program, where there was no clear ways to opt out or avoid some of these target advertising that they collected all this data on. And so as a result of this, they are going to face some sort of penalty, I would imagine, a fine of some sort for this violation.
Can we just say that Europe's got it right on this stuff? Like, I know we criticize them a lot, and their economy has lagged the U.S. from a number of different perspectives. Some blame it on chance. Others blame it on policy out of Europe being, too locked down. Some people blame that on their failure to really invent artificial intelligence and innovate in a lot of different ways because of all the regulation and red tape that they have. But I have to tell you, when it comes to internet privacy, I really respect what Europe has done there, and I wish we would implement similar things here.
Yeah, I think you did a good job of sort of illustrating the two sides of the coin. One is this country has benefited tremendously from all the technological advancements over the course of the last couple of decades, and that has benefited.
Massive wealth builder.
Exactly. But contrarily, it's sort of break things first and then, ask for forgiveness later. A lot of these technology companies have gone through that process, and we have a system that allows for that. There's definitely drawbacks to it. The wealth created is the positive, but the negative is that on a privacy front, we've all been hacked, probably, almost assuredly, and privacy is limited.
Markets are mixed. The NASDAQ down 150 points, 0.8%. S&P off 15, 0.25%. Dow positive for the day so far, up 228 points or 0.5%. We'll have an inflation reading tomorrow, so stay tuned, folks. Have a great rest of your day.